All right, Kyle, I think we're recording. I see the little number there, so I think it's going. So, my
All
name
right,
is
we're live.
Amar, and this is Kyle.
Hello?
And, sometimes things don't always go as planned. So, today we're going to talk about divorces and what things you should be cognizant of. A little bit of a deeper dive into stock options and how those work, or cryptocurrency or anything like that that's very volatile, if you will. But before we get started, we have, come on. I'm trying to share my disclosures. It's not working.
Well, maybe just
Okay.
say your piece there, and then we'll
Yeah.
take it from there.
So basically, these are just opinions. This is not, we haven't taken your account or your situation into account, right? We're just giving educational material here. No client relationship has been engaged. Kyle, can you think of anything else? You have to go.
Yeah, I think this is just merely a discussion, educational discussion between Amar and myself. This is free content between Amar and myself, and it's just for discussion purposes. And if you have any questions or any follow-ups, please feel free to reach out to us. Our contact info will be in the comments or in the description below, and we'll take it from there.
Yeah, and I was able to get the disclosures up there, so compliance will be happy. But let's spend some time just talking about divorces. I mean, divorces are a situation where emotions are really high, and it's one of those situations where if you're dividing up assets, and we're not talking about all the different aspects of divorce. We're going to focus on assets and the taxation and different pieces around that. But when you divide assets, you'll get what's called a quadro from the court system, and that's how you actually go to the financial institutions to split up accounts and stuff like that. But what we want to focus on is that not all assets are created equal. Like having splitting 100,000 in cash or taking cash instead of taking like a cryptocurrency instead. I mean, one has a lot more volatility. Usability. I mean, there's a lot of variables there that we'll probably want to kind of discuss more in. So let's first, Kyle, let's talk about the types of accounts that people would potentially be splitting up.
Yeah, I think just high level. One of the fun parts about our job is I ask questions like, "Do you love your wife or your spouse?" and "When do you plan on dying?" So your finances, commingle with your personal life, and it's like you said, emotions are high, and during a divorce you usually take inventory of all your assets, basically come up with a personal balance sheet, and more or less, in a community property state like Washington that I'm in, or California where Amar is, things go 50-50 for the most part, what's mine is yours state. And like Amar mentioned, not all assets are created equal. So if you receive cash, there's no tax liability associated with that. If you split up your stock portfolio, or if you split up your cryptocurrency assets, or if somebody gets the house and one person doesn't, or paying off the house or selling the house, there's tax implications associated with that. So if you take a $50 amount, and you look at today, splitting it 50-50, we also should be looking 4, 5, 10, 25 years down the road on exactly what your impact will be. And like I said, it doesn't always go swimmingly. Emotions are high, and some people have some attachment to the house that you raised your kids in, or maybe the business that they started, and they want more peace here and less there, and it's a big, obviously, negotiation piece that I usually don't like to be a part of. Let lawyers take that,
right, exactly.
And I just advise on the tax implications, which throughout my career I've seen a number of different situations work adversely for the client or work to their benefit.
Yeah, I got one specifically there, Kyle. In 2008, I had a couple that was going through a divorce, and one of the spouses wanted to stay in the existing house, and the housing market had just crashed significantly, and the other spouse didn't want to let go of the house, right? Like wanted more than what the house is worth. and that can create a lot of tension, right? And you have to be cognizant of, if there are other assets, there are different tax consequences. So if we look at qualified plans, right, money has gone in there pre-tax, it's growing tax deferred, and it comes out 100% taxable on ordinary income. But you can't touch most of those funds till 59 and a half unless you do like a 72T distribution or something like that.
Right.
Then you have other accounts like Roth IRAs, right? Like if somebody said, "Do you want an IRA?" Let's say if you have an IRA for 100,000 and a Roth IRA for 100,000, the Roth IRA is worth more because the taxes have already been paid than the traditional IRA.
Yep.
And when we look at this, what would you say specifically around cryptocurrency? Like, I think you said you had an example of a client that had cryptocurrency, right? And was going through
I had a client that was going through a divorce, and he invested really early in cryptocurrency, had this gigantic capital gain associated with it, and he was trying to contemplate, like, if I transfer the cryptocurrency to my spouse, she's never dealt with crypto and doesn't know the tax implications or how to manage it or kind of how to manage the portfolio and kind of think as an investment, right? So it would, in her hands, it would be worth a lot less to her than in his hands, right? But if you're looking at dollar amounts and splitting it 50-50, sorry about that. That happens. We're running live.
That wife was calling.
Another client calling me. And just trying to be cognizant of how that asset is going to be managed in the spouse's hands, right? And does it make sense maybe to sell it this year while you're married filing joint? Maybe the tax brackets are going to be a little bit more beneficial to you, or holding on to it. And if you're bullish on the price or think it's going to go up in value, maybe that's an asset that you want to keep. So that's all kind of the wishy-washy part of a divorce settlement. Like I said, that I usually don't get too involved in. But like you said, not all assets are created equal, and you have to be cognizant of the tax effects.
Yeah. So far, just to summarize, what we've talked about is, not all assets are created equal, but also liquidity, right? The liquidity of the type of assets. Let's change gears and talk about stock options, right? Because there's different phases of a stock option, right? There's the grant, and then there's, so you want to talk a little bit more about that?
Yeah, and so there's basically 3 or 4 different types of stock options out there that I generally see, and generally there's a grant date, a vest date, or exercise date, and then when you sell, right? And so maybe something you were granted hasn't been exercised yet, and so you still have to pay the tax on that dollar amount. So let's say you have $1 million in stock options. Well, it's really worth that less the strike price, less the tax effect, right? So it's not going to be, might say $1 million in assets when you open up your Morgan Stanley account or your Charles Schwab account, but it's not really $1 million. Yeah. And so you don't have $1 million liquid there. Whereas if you transferred cash, for example, like we mentioned earlier, that would be $1 million. The tax has already been paid. There's no tax implications. And so looking at everything from an after-tax effect, in terms of stock options is usually what I, recommend bringing into the negotiating table. And so, grant means that the company intends to give it to you, but if you haven't vested yet, or if you're going to vest after the divorce is finalized, is that spouse entitled to that, right? Has it already been earned? That's another, like I said, that's more of a legal debate than an accounting or tax debate, but just thinking of those aspects when you're dividing up your assets or kind of the future earnings of stock options.
Sometimes with these startups, you can get a really cool looking startup and you think those shares are worth a ton. And then in reality, 3 to 4 years later, they could be worth less than, they go up and down. This is kind of what I'm trying to articulate.
Yeah. I mean, it could be could go up 100 times what the value is today, or it could be worth absolutely nothing in a short period of time. And so those are all considerations. And, it's always hard to take a snapshot value of at the divorce date and dividing it up that way.
Yeah. And I guess one other thing that maybe we should talk about is that the divorces that we have seen go well, or assets been split in an effective manner, have actually split the assets, and then there's no shared relationship on accounts, right? The ones that have been emotionally draining the most for either spouse is the assets that they've tied together and they've kept it like that and then sold it down the road. But during that time period, it could be not the best working relationship.
Yeah, and so as a CPA and you as an advisor, I think it's hard to represent both parties in a divorce, just for that same reason that we've been talking about of separating assets, and it's going to benefit somebody maybe 5 years down the road, or this person's bullish on the value of this and this person thinks it's worth nothing. Doing those sort of negotiations with the same advisor is very difficult. And
yeah,
so
it's probably not in either. It's not in any party's best interest, right?
Right. And so I always recommend, that one client group of a married couple kind of splitting into two and each finding their own advisor group. And, I found that to be a lot more successful than trying to advise for both, because there is a conflict of interest occasionally. Obviously, I want to have both parties be completely equitable, but it's just not possible in a lot of situations.
It's hard.
Yeah.
I think that's good, Kyle. We cover the fact of not all assets are equal, liquidity, what is stated value, or I guess like another way of saying it is that certain assets have more volatility, like stock options, crypto. Some assets have less volatility, and that should factor into the equation. And kind of cutting the cord, as well as making sure that the advice that you're getting is independent from the advice your significant other or spouse is getting, right? Like, so you have somebody that's in your corner and looking out for your best interests.
Yep. So fun topic. Love talking about. But it's just it's a fact of life, and we come across it, and there's a good way to navigate, and then sometimes not so beneficial way to navigate it. And Amar and I are here to help you through that process, and we'll be the objective professionals in that situation. And
there you go. If you have questions or comments, just put them down below. Both Kyle and myself do I would say a good job of actually reading the comments and kind of trying to expand on a question or anything like that. I know Kyle, you spent some time on there recently, but
absolutely.
Also, if you have an idea, also if you have an idea for a video, just let us know.
Yeah, we're happy to have the engagement, and the more comments and likes and subscribers and everything that we get, the more we enjoy doing this, and the more content that we'll be putting out there. So
yeah, and it also helps other people find like the work that we're doing, right? So it helps somebody else just like you find the same content. So
exactly.
Thank you.
All right, thanks guys. Bye-bye.